Okay, I think I start the daily briefing today. So good day, everyone. So welcome to daily briefing. So today is 9 July. So today is Friday, TGIF to everyone. Okay, now let's take a recap on our previous important economic data. Okay, so the first one is U.S. initial jobless claims, 3rd July. Okay, so the previous is 371K and the forecast is 350K. I mean, K is thousand. Okay. Now, so the actual is 373,000. Okay. So the actual is higher than the forecast. So a higher than expected reading should be taken as negative or bearish for the US dollar. So for last night, the US index is actually went down. Okay. Now, so for the second one, the second previous important economic data on last night is the US EIA crude oil stocks change 2nd July. Okay, the data is on 2nd July. Okay, so the previous is negative 6.718 million. So the forecast is negative 4.033 million. The actual is negative 6.866 million, which is lower than the forecast. Okay, so the increase. Okay, so the decrease in crude is less than expected. It implies greater demand and is bullish for the crude prices. Okay, the same can be said if the decline in the inventory is more than expected. Okay, now so the previous day, let's take a recap on the previous day market volatility. So it's gold. The volatility it rise. The market volatility, as we can see here on the right side, on the market graph on our right side here, the red rectangle inside the red rectangle here, the volatility it raised 220 pips, then decline again. So as we can see here, it's a bullish here and then bearish again. Okay, now so the market volatility factor, let's read here what happened on the gold market last night. So spot gold fell slightly in late trading to 1800 and 2.83 per ounce. So the US dollar index fell 0.3% and the yield on the US 10-year treasury note hover near a low in more than 4 months, pushing spot gold to rise to 18.39 earlier in the session yesterday. So then the decline in the stock market caused some investors to sell gold, which made gold price fell, but it remained at a high level since the past 3 weeks. So as you can see here, there's a factor that pushed up the gold price to 18 and then fell down again. Okay, so when come to today, in the EU section, we have to take note on this important economic data, especially to the UK one. So 2 o'clock, the UK, there are four important UK economic data, and also the 6 o'clock one, there are two speeches on from Bank of England, Andrew Bailey, and also the Euro Central Bank, the President Lajat speech. So we have to take focus on these two speeches. So if any one of your client trading any instrument regarding GBP or EUR, they have to take focus on this time. So let's just take a look on our first important economic data today for EU section, the UK goods trade balance May. So the previous is negative 10.96 billion. So the forecast is negative 11.1 billion. So the data release time is at 2 o'clock in the afternoon later. So a higher than expected reading should be taken as positive or bullish for the GBP, while a lower than expected reading should be taken as negative or bearish for the GBP. So the second is UK GDP 3-month average May. So the previous is 1.5%. The forecast is 3.9%. The data release time is still at 2 o'clock later. Same. So a higher than expected reading should be taken as positive or bullish for the GBP, while a lower than expected reading should be taken as negative or bearish for the GBP. So when come to the third one, so UK manufacturing production yearly May. The previous is 39.7, which is very high. Okay, so the forecast is 29.5. Slightly lower than the previous. Okay, so the data release time is at 2 o'clock later, same as the previous important economic data. So a rise in manufacturing production signify increasing economic growth. Therefore, a higher than expected figure will be bullish for the GBP, while a lower than expected should be bearish for GBP. Okay, now so the last one of the important economic data in EU section today. So it's the UK GDP yearly May. Okay, so the previous is 27.6%. The forecast is 25.9%. So the data release time is still at 2 o'clock today. Okay, so a higher than expected reading should be taken as positive or bullish for the GBP, while a lower than expected reading should be taken as negative or bearish for the GBP. So let's go back to this. Okay, now so for the all these important economic data today for the EU section, they are all about talking about the GBP. So at 2 o'clock, there will be a big volatility to the GBP today. So any one of your client trading any instrument regarding GBP, they have to take note at this time, 2 o'clock and also 6 o'clock for today. Okay, so when come to the next session, the next EU is the US session. So the important US session economic data today is just only the Canada employment change and also the 11 o'clock Fed monetary policy report. I think this will bring a minor market volatility to the US dollar today. Okay, now so for the only one important economic data, let's take a view on it. So the Canada employment change June, the previous is negative 68,000 and the forecast is 195,000, which is higher than the previous one. Okay, so the data release time is at 8:30 tonight. Okay, the beginning of US section. So at a higher than expected rating should be taken as positive or bullish for the Canadian dollar. Okay, so while a lower than expected rating should be taken as negative or bearish for the Canadian dollar. Okay, so when come to today market update, I will keep you update on our gold price here, our gold market here. So for the resistance level for today is 18.15. Okay, so the support level is at 17.97. Okay, so my personal opinion is actually I will remain bullish. Okay, yesterday I will take it as bullish. Actually, it actually went up and then come back down again. But today I will still take it as bullish. Okay, so why? Let's rate the market trend factors here. So the fall in U.S. Treasury yield reduces the cost of holding non-yielding gold. So it boosts the gold price. After that, yields rebounded slightly from their lows, and the stock market recovered some of the losses, putting pressure on the gold bulls. So as you can see here, why the gold price go up and then go down again. Okay, so as a safe haven asset, gold should still be supported, especially given the concerns about the recovery of the US labor market and the variant of the Delta virus. So although gold has risen for 6 consecutive days, it still has not been able to get rid of the 1800 mark. So the doji, the daily candlestick recorded on Thursday, means a signal of possible change of the market trend. US stock fell and the market's risk aversion is heating up to make gold gains. Okay, so on the other side, inflation expectations is getting cool. So surprising gold price in the day, we need to pay attention to the market risk aversion, and also there are possibilities for long and short market trends. But why still take it as bullish? Why I will still take it bullish? Let's take a look on our market graph here. So when I change into the daily, the daily market, daily candlestick, as we can see here, there are 6 consecutive days the gold price went up on the 6 consecutive, and then the last night is a doji. So actually, this is a very obvious. This is still a bullish trend for the gold price. That's why our tickets on my personal opinion for today is still bullish. Okay, so that's all for our daily briefing today. So I hope you guys do good and see you again. Bye bye.